What's up, you guys? It's your girl Alexandria B, back at it with another weekly swing trade watch list. Y'all, last week the market ended bullish. Amen. Amen, by the grace of God. When you're in a bull market, the most frustrating periods is when we are consolidating in a distribution phase, and then those couple of weeks where the market pulls back. It have you questioning life, wondering, is this for me? Is this what I really want to do? It is. Stick it out. Stay resilient. Because the portfolios last week were green, green, green. Now, if your portfolio closed red or you don't have one, make sure that you email me, comment down below, reach out to me via social media, DMs, whatever you got to do so that we can fix that. All right. Trading makes you rich for a little bit because eventually you're going to give it back somewhere along the lines. All right. Investing makes you wealthy for a few generations. The market doesn't do anything but go up. I'm just saying. However, let's go ahead and hop into it and check out what's on the economic calendar. We have a lot of Fed speakers yapping, doing what they do. It is important, but they're still yappers, all right? On Tuesday, we have consumer confidence, beige book on Wednesday, retail and wholesale inventories, pending home sales, jobless claims, GDP on Thursday. My gosh. And then on Friday, we have the personal income spending, which is just directly related to the information that we find out on GDP, which stands for gross domestic product, so it's all the PCE information. Now, I have noticed and received a lot of questions lately about economic data and what do we pay attention to, what's important, and all of that. How do we use the resources that I've shown y'all in previous weeks? So after you're done watching this video, make sure that you come right back and check out the video over economic data. And I'm actually super excited about this because I realize a lot of things that are already on our watch list from previous weeks report earnings this week. So on Tuesday after hours, we have Kava. Now, Kava has been on our watch list for the last 3 weeks, my babies. Please tell me that y'all are still in it. Please. It's beautiful. We'll check it out. Wednesday, Abercrombie and Fitch. That was just on our watch list last week. Dick's. Obsessed with Dicks and Deckers. I am obsessed with their balance sheet and income statement. Where is sporting goods gonna go? Auto parts. We got HP, American Eagle. Thursday, we have Foot Locker, Dollar General, Kohl's, Best Buy, Hormel, Burlington, Birkenstock. Are y'all seeing a theme? What did we just say was on the economic calendar for Thursday? Retail sales? All right, and y'all know I am ready, anticipating Costco on Thursday. Cannot wait. Now, before we head into the futures, did y'all notice anything? Now, not the inches that I grew overnight, but the lighting. Let's give a round of applause to the podcast studio be up and running, y'all. I am so excited that y'all are excited for the Beauty in the Bull Market podcast. Make sure that you subscribe to it. It is still here on the Wall Street Ben Black YouTube channel, but you just go over to the podcast channel. Make sure you subscribe to that and then click the link in the description so that you can subscribe to the audio version, Black Women Aren't Monolithic. Because if you know anything about me, I am professional, intelligent with a solder ratchet. I'm not monolithic. All right, so let's go ahead and kick it off with ES. Y'all see that doji that happened last week? In comparison to the other indices, ES is slightly weaker. So I'm going into the week very open-minded. I'm not thinking we're just going to have this major drop, major pullback. But I also don't think that it's going to blast off. We'll play whatever the market gives us. So the levels that I'm absolutely looking for is I'm playing the range of last week's candle. So I would love to see if price pulled back and held the low of last week. So around 52.70, 52.80, that range, and to be able to hold that as support. Hold it as support, all right? As long as we're getting to pull back in there and be able to hold it as support and to move back up and again break the high of this last week. There is some weakness. That volume definitely came in higher a little bit last week, but I have a very open mind because overall the market is fairly strong. let's go ahead and check out NQ. All right, now on NQ is actually looking extraordinarily strong. For NQ, I'm looking for it to pull back to the 18,673 range. I give ranges. I'm a range girly because anything goes, and I see the gray area of the market. All right, so I'm looking for it to pull back to this 18,673, which was previous all-time high that we broke and held last week, and to pull back and hold that as support. Now I actually do want to go back to ES and check out the 1 hour for y'all, because I found this like really interesting. Is that we did fail to break. It did fail to break these highs, the new high that was created on Thursday. So if y'all look at this on the hourly, so Thursday the 16th, right? And this range right here failed to stay above, so this 53.49. If this continues to push into the 53.49, I still would really want to see it do a pullback first before I played anything to the upside. Like if this came and it just blasted through this level and went off, I'm not interested in getting in, because at some point it's gonna pull back, and it'll pull back hard. So I would love to see something like this break above, pull back, hold this level as support, and then move up. Now this might not happen in a day. It might take a couple of days for this move to play out. Guess what? I will wait. I will be patient, because when it happens, it will be lit. All right, so now we're going to head on into our swings for the week, and we're going to go ahead and start off with the tickers that have already been on our watch list that I know y'all are already in. I had someone DM me and show me that they have been trading Costco, and they are up $15,000, and that's how you do that right there, my queen. That's how you do that right there. However, the only reason I'm pulling up Costco right now, because I'm fully believing that we're going to see this 866, is because I need y'all to understand. If you are building your account, take profit on this trade. Wait until after earnings. That's all I got to say about it. Don't try to hop into it before earnings. Wait until after earnings. That's all I got to say. Next up, we have, that's Costco again. Next up, we have Target. Now, Target. Y'all. Go on now, y'all. Y'all know we was watching this 156, this 155. Now, of course, earnings came out. I did not play this prior to earnings. I was like, are we going to double bottom, return to the trend line, blah, blah, blah. Should have known that Target was not going to do well. Have y'all seen their balance sheet lately? Oh, my God. Let me know in the comments if y'all want me to dissect the company and show y'all how you research it. The fundamentals of that company with the income statement, balance sheet, how to check their debt, how to look at their board, the company board, just all of that. Let me know in the comments if y'all are interested in that. However, typically whenever you see a big drop like this, whether it's just a big gap down, whether it's earnings or whatever, the first move that you will see after this drop is you will see price to start to move back up. Much like what we've been looking at Starbucks for the last 2 weeks, waiting on that. Can't wait to show y'all that. So for right now, I'm going to wait on Target to continue to push back up. I do believe that it will make the $10 move back up towards the 155, because if I turn on the 9 moving average, we have it here at the 153. So I fully believe that we will push back up towards there, but I will be waiting to see for it to reject, because at the end of the day got in for Target. As a great philosopher once said. We come back over, and now let's check out Oracle. Baby, I hope that y'all took profit right there at that 127.45. I hope y'all took profit there. Now, I didn't quite reach there. What was the high of last week was 126.70. So almost there, but I hope y'all took profit. As much as you have been staring at this supply zone where we have seen historically, every time it gets up here, it rejects. I hope you took your profit. Right? So what are we looking at for the next move? I want to show y'all why I marked off this purplish box right here. I had my moving averages pulled up. Y'all know I love the 20, 50, 100, 200. and then the 9 when I need it. So I marked this range off for the 50 EMA and the 20 EMA because clearly we can see that the 20 EMA is working its way back up to give us this bullish crossover. So I am anticipating that Oracle will continue to drop down to meet the daily 20 EMA, hold it as support, and then as price moves back up, the 20 EMA will move up with it. Don't let that go over your head. Rewind that a couple of times if you need to, all right? Because if I turn the 9 moving average back on, the 9 is above the 50. It crossed above our 20 MA back May 13th, right? And then we saw it cross the 50 on the 22nd. It's just, price is just pulling back to return to average to move on back up. And this level that I had marked here, the 120.26, we've had that on our charts for quite a while. And it's actually the 50% point in between the 50 and the 20 MA. I love technicals and how they always line up. Chef's kiss. So that is what I'm looking for, is for this to pull back, hold that 20 MA, and get the move back up, because I'm absolutely believing that Oracle is prepared to break all-time high. Y'all already know that I'm going to pull it up to see what the forecast is, and it's 160. We're currently at 122. I will trade Oracle up to 160. We will trade Oracle up to 160. Amen? All right. PG did what it had to do. Definitely did what it had to do. Now, I overstayed my welcome on Procter & Gamble. Move. I overstayed my welcome on Procter & Gamble. As it started to distribute here with the range decreasing, I'm seeing that MACD did a bearish crossover, but not only that, I see that RSI did a bearish crossover on Wednesday, and I stayed in the trade just for it to return to the 165 on Thursday. So I left unrealized profit. I had unrealized gains, which I still closed the trade real green. So no complaints, but I knew better than that. All the signs were there. Now, everything is still looking bullish on the weekly time frame. We don't have any bearish crossovers. So when I look at this is where I say, okay, let me rely on my moving averages to kind of help me be able to see where it is that I want to go. So I'm also going to turn on the 9. And really what we're paying attention to is the 9 MA and the 20 MA. The 9 is my green. The 20 is my yellow. I'm going to make that rectangle again in between the 9 at 162 and the 20 at 159. And this is the range that I'm looking at for price to pull back and hold as support. Now, if y'all want to trade the pullback, because I do like to reverse the trades. If you don't want to, if you want to trade the pullback so that you can collect the profit and then you can buy more contracts to the upside further out. Y'all see this? Let this lose 165.20. You need to go ahead and target 159 at the earliest. That would be like scale out there. Scale out there. Because in a day, Procter & Gamble, in a week, Procter & Gamble's average true range is $4.32. So from the 165.20 down to the 162, it can make that move in a week. And then the following week, perhaps close that space down to the 20 MA, because that would be from 161 to 159 and possibly even to the trend line. So 161 to 157 is right there in that range. So this could potentially be about a 2-week short trade to the downside to let it bounce. But you have to remember, you're going against the trend. So it's not going to be an easy ride. It'll be one where you're going to have to throw you some balls. Man up on it, all right? So let's look at JP Morgan. This one was beautiful. We caught this on a day trade right at open. It ended up going for like 120%. Let me go ahead and pull it up into Discord and show y'all the profit. So right here, what we're looking at is our watch list channel, where my amazing brothers, amazing analysts, in the morning they put out levels for SPY, economic data that you should watch, or just some tickers like, hey, watch these. So, and then, I come in and I put mine and I said JP Morgan. This is how we're going to play this off. Y'all see at 8:34, second target tapped. All right, y'all see at 8:50, we starting to scale. At 200, caught a $4 move up at open. 20 minutes into the market, it was absolutely beautiful. And if we go over to the gain section, we actually had quite a few people traded JP Morgan with me, and we ate. The gains be gaining. Shout out to my fam. Shout out to my fam, like for real. So we did get into Morgan Stanley as well. And with the JP Morgan here, 46%. Love that on the Morgan Stanley, which was on the watch list last week. 46%, 23%. Swung it to the 104%, 4%. No, it's the same day. JP Morgan ended up going over 150%. Per. Click the link below and make sure y'all join the Family Reunion Discord. We lit. However, back over here and let's check this chart out. So for the week, there's subjectively, we have a tweezer top, and I'm just like, no. You need to keep going up. But when I'm looking at the RSI and MACD, it's too diverged for me. The lines are too together. We like for them, or too converged for me. We like for them to be diverged. Case in point, great example is right here. When you see that MACD, when the MACD line and the signal line actually diverged apart, you got a strong move. But when they start to consolidate and their converge, prices consolidated. We're starting to see that convergence right here. So to be honest, I'm not interested in JP Morgan. Definitely don't want to play it to the downside, but I will be watching to see if this continues to pull back towards the 191 and be able to hold that as support and then move back up. Now, if for some reason we do break the 204, the high of last week, then I will look to enter and play it into the 211 and so on, hold it all the way to the 231. Starbucks. So remember what we were talking about with Target. When you have this big drop, let's go to the daily. We had this big drop. You should expect for the first move to be for it to work its way back up. This is the same thing that we've just been watching. Some of y'all did let me know that you did go ahead and trade it from the 77 or from the 72 into the 80. I love that for y'all for paying attention. My little fisherman. I love that for y'all. Me personally, I just don't think that Starbucks is gonna make it back up to the weekly 9 MA and then stay up there, because y'all see what happened when it did tap to 81. Immediately reject. We go back to the daily, right? Immediately reject, but it is holding this 9 MA as support on the daily. So my eyes are watching, but at this point I have an alert set ready to see what happens when it reaches the weekly 20 MA. I am expecting that it will reject and work its way back down towards 72, and maybe when it gets there we end up getting a double bottom. I don't know, but I know right now the investor sentiment for Starbucks is come on back down here. So this is the move that I'm waiting for. I want to see what happens when Starbucks gets to 82.77, 83 range and catch that reject back down towards 72.67. If I see it start to hold when it does get to the 72.67, I would expect, okay, what's happening is a double bottom back up, and I'll look to exit the trade then. Still don't want to play it to the upside. Free Palestine. All right, Home Depot. Let me make sure that y'all understand this. Starbucks, Target, Kroger's, Walmart, Home Depot. Have you seen any retail store to the upside? Make sure you're out of Costco. All right, so Home Depot. Little pro tip that I wanted to make sure that I told y'all this. I might have said it in another video, is that head and shoulders. The right shoulder tends to resemble a bear flag. All right, catch that T. Remember, we were looking at this saying, well, is this a bear flag? Will it hold? It did not. Earnings came out and Home Depot said, no, right? It did not push up. We didn't get that. Ended up coming down, breaking the flag on Tuesday. I did enter, and I'm looking to play it down into the 314. Now, if you didn't enter, what should you do? Y'all see this gap right here on the weekly? We're going to mark this gap off from the close one to the open there. Right. Y'all see this? Fully would love to see Home Depot pull back towards the 320s. It's currently at 325. Oh, it's going down. I was like, what? I would love to see Home Depot pull back towards 326, 327, and then continue its rejection on down at 314. You never, even in a bearish candle, at some point it made a high. So if you're expecting for the week to be bearish, if you're expecting for that next candle to be bearish, wait for it to go green first so it can get the high of the week out of the way, and then you can catch the ride all the way back down to the low and to the close of the week. All right, if you're expecting a bearish candle, let the week be bullish first, whether it happens on Monday or Tuesday or when, let it make a high first. All right, so with me looking at that, of course I'm watching this gap, so like the 326 to 329, we'll just say that. Would love to see price pull back there and catch the reject back down towards 314, because Home Depot said no. They said absolutely not. Now, if you do have any problems spotting the head and shoulder, I got you. Left shoulder, right shoulder, left shoulder, head, right shoulder, which resembles the bear flag. And we got the drop out of there. Victoria's Secret did not have to do me like that, baby. You were supposed to push all the way up to 27. What happened? What happened, Vicky? Somebody told your secrets? But y'all see what it's landed in between the 20 and the 50. I'm watching the same thing. I'm not going to play Victoria's Secret to the downside, but I am still watching to see it break over 22.58 to play into the 100 moving average right here at this trend line into the 27. So still watching for that. CCL, this was a ticker request, so I know y'all can tell that this video is a little newer, but I did get ticker request a little late. I do got to analyze it, record it, and then edit it now, my babies. All right, but CCL looks delicious. It looks delish, honestly. I like this trend line here. So this range that we have here, I'm on a daily, yes, this range that we have here, I love this tweezer bottom. To me, it's just like too clear. It's too clear. I wouldn't even want to take a trade over 1570. If you have this trend line here, wait to see a daily close above, not even just above the 1570. Yeah, I got that from the fib levels. This is the 0.5 on the fib, the 0.382, 0.5, 0.618 in these levels. So yeah, just wait for it to break the trend line. Wait to see a full daily close above that trend line or below this trend line. So we'll say above 16 or below 1435. That's money. Shop. We will catch shop. I got stopped out of Shopify and I have never been so upset, but I had the alert set. It was what it is. It was what it was. Let me show y'all what it looked like on the weekly or on the hourly. We've been holding this range. It gapped up. It broke my levels. It stayed strong until the last 30 minutes of the market. It rejected. I said, all right, I got my stop in place. And the stop was 57. Let's go look. Let's check Discord. 58.20. So this is the Swing Trade Challenge channel because I am the swing queen. If you know, you know. If you don't, I just told you. I was just joking. So we are doing $250, turning it into $2,000, rinse and repeat. I have fun over here. This is, and I'm really teaching them like leaps. Although I know that they've been frustrated with me, but it hasn't been leap season. It's leap entry season now. However, so yes, 58.20 for my stop loss, and chow, it hit it the next day. Now what I'm going to need for you all to notice is that I kept my stop loss. Wasn't no wishing and praying and saying, well, I see what I see. It's not there yet. Let me make sure that I retain some capital instead of stacking up the loss. I will re-enter because we only took a 10% loss. So to me, a win's a win. We still got 90% capital to play it out. Came right back down to these same lows. Listen, over at this point now though, since I did get stopped out over the 58.20, baby, gonna have to hit over 60.37 for me to comfortably trade this to the upside. If you start to see it bounce, I'll say above 57.32, it would look pretty delicious to trade it into the 58.15. Shop's daily range is $2.50, so it could absolutely make it back up towards the 60 in 2 days. I will catch Shop because I see what I see, and the setup is there and it's ready. It's ready. Now, the last one we're going to look at is Dollar General, because it's Dollar General. Y'all not going back up, and y'all know that they have earnings. What is it, Thursday? Yes, Thursday pre-market. So I'm not looking to enter this before earnings, but it is something that I want to go ahead and put on y'all's radar, because we will catch this post earnings. I do not think that they're going to beat earnings, so we'll see what happens after that. I'm hoping that we go ahead and get this break out of these trend lines that we have here. So what I used here, instead of making my own trend lines, what I did was, when you are using TradingView, which we all should, instead of clicking the trend line, I went to the parallel channel. Click that, you draw, and you just drag it up. You just draw and just drag it up, and to extend it out, you click the ones on the side. You make your adjustments there. So I really like this because it shows you the halfway point of the trend line. So if we come down to the 1 hour, and you can really see price action, like, look at that. Isn't that cool? You can catch beautiful day trades off of drawing the parallel channels? Yeah, off of drawing these parallel channels. Beautiful day trades in here. So honestly, hey, over the high of, or we got this gap here, it's over 145.39 to trade that sucker. Don't do it though, but you see it, it's there. So on the daily, I would absolutely love to see this break below the 140, which is breaking below this trend line, and to catch that move down to the 131, if not lower. So let me go ahead and turn these off so that y'all can see the averages, and we'll go to the weekly. Y'all see that? Stuck in between the 20 and the 50. There is no buyers. Look at that. The momentum is not, there is no buying momentum or bullish momentum according to the weekly MACD. Just looks just like a hope and a prayer to get to the upside. All right. And then we can see this, the 50, and then with the 200 down here. And look how it kind of just draws this box for you. If we were to mark this off, to mark off from the 50 to the 200, and turn those off so you can see. Look at that. Leave it alone. All right. So we either want it above this or above the 147, which you might as well wait till the 151. That's actually, and that was my focus point right there. We caught these lows. So yeah, above 150 or below this 134. Because if it does break below the trend line that is set there, baby, that's not. It just means that they came in with poor earnings as expected. It's Dollar General. They got a little too big for their britches. Okay, and continue to play this move to the downside. But that is the watch list that I have for y'all. Thank y'all so much for the support, especially for hyping me up over the Black Women Aren't Monolithic and the Beauty in the Bull Market podcast coming June 8th. But again, make sure that you are subscribed to the audio version of the podcast, Black Women Aren't Monolithic, because I am going to drop an audio version of my book, Join Them, Then Beat Them. Yeah, ain't no more paying for audiobooks over here. Download your podcast app for free. See y'all at the top, fam.